Hi guys, welcome back. It's Lola. We've all heard it before. Just invest your money for a long time and you'll build wealth. And yes, in theory that's true. Over time, your money should grow and one day it can change your life for the better. But here's the big question. If it's really that simple, why isn't everyone a millionaire already? That's exactly what we're going to unpack in today's video. So let's dive in. Quick reminder, nothing here is financial advice, just my own research and perspective. If you enjoy content like this, make sure to subscribe and hit the notification bell so you don't miss future videos. Let's start simple. Suppose you invest $1,000 once and never add another cent. At a 7% average return, here's what happens. After 10 years, you'll have about $2,000. After 20 years, you'll have about $4,000. After 30 years, you'll have about $8,000. And after 40 years, you'll have almost $15,000. That's the power of compounding. Your money earns returns, and then those returns earn returns. But here's the real magic: consistency. If instead of a one-time $1,000 you invest a little every single month, the numbers get massive. By 7% a year, I mean the real return. That's already after inflation. Saving $50 a month grows to about $131,000 in 40 years. Saving $100 a month grows to about $262,000. Saving $250 a month grows to about $656,000. And saving $1,000 a month, that explodes into more than $2.6 million. That's the snowball effect in action. Small, steady steps turn into life-changing results over time. Now, combine that math with a smart investment strategy, broad diversification, long-term focus, low cost, and steady returns. That's exactly what global stock portfolios do. And the easiest way to access them is with an ETF. You won't get 7% every single year. Some years are up, others are down, but on average, history shows around 7% per year after inflation. That means the growth we're talking about is already in terms of purchasing power. $1 million in 40 years won't buy the same as $1 million today. But using 7% already takes that into account. So, the compounding math is realistic in terms of what your money can really do for you. So, if it's that logical, why doesn't everyone become an ETF millionaire? Time horizon, 30 or 40 years feels impossibly long, and many people start too late or quit too early. Savings rate, it's easy to underestimate how much you need to save. Life gets in the way, whether it's kids, a wedding, or unexpected emergencies. Risky behavior, chasing meme coins, hot stocks, or niche funds can wipe out returns. High fees, even 1% in hidden costs eats thousands over decades. Psychology, the first 10 to 15 years look boring. Growth feels tiny, so people lose patience or panic during downturns. And of course, life itself isn't a spreadsheet. Career, family, health, these all affect how much and how long you can invest. Here's the truth. Yes, the math is simple. Yes, compounding works. But to win, you need two things: a solid savings rate and time. If you're under 30 and you're watching this, congrats, you've basically hit the jackpot of life. Time is your biggest ally. And remember, you don't need $1 million. Even $250,000 or $500,000 can massively improve your life. That money could help you enjoy a more comfortable retirement, support your parents when they need you most, or simply give you peace of mind knowing you're financially secure. Real wealth doesn't always have to be flashy. Sometimes it's about freedom and taking care of the people you love, so there you have it. Why not everyone becomes an ETF millionaire, even though the theory sounds so simple? If this video helped you, please give it a thumbs up, share it with a friend, and subscribe for more finance and lifestyle tips with me, Lola. Stay consistent, stay patient, and I'll see you in the next one.